Hey everyone, welcome back to another episode on the channel. And wow, what a week it's been in crypto. If you told anyone just a few days ago that you'd be able to buy internet computer ICP at $1.20, $1.50, or even $2, they would have probably laughed at you and called it impossible. But guess what? That's exactly what happened this past Friday. The market just witnessed one of the most insane crashes in recent memory. Something that'll probably go down in crypto history as one of the wildest days ever. We're talking about a market-wide meltdown that shook every corner of the space. Within just a few minutes, the prices of almost every altcoin fell off a cliff. Projects that had been stable for months suddenly saw their values drop by more than 80%. It was absolute chaos, a true roller coaster that only crypto could deliver. To put things into perspective, we saw nearly $19 billion worth of liquidations in just 24 hours. That's right, $19 billion. The date, October 10th, will forever be remembered as crypto's Black Friday, both literally and figuratively. It was even more devastating than the crashes caused by COVID or the collapse of FTX. In fact, this one was estimated to be about 6 or 7 times larger than both of those events combined when measured by liquidations. Now, while the total market cap percentage loss during COVID still holds the record, this latest crash was an unbelievable shakeout. But here's the thing. In crypto, every massive crash comes with massive opportunity. And smart investors know that chaos often creates the best entry points. That's exactly what we saw this week. People taking advantage of the dip and loading up on altcoins, especially on ICP, at bargain prices. This video is for informational and educational purposes only. It is not financial advice. Always do your own research and consult a professional before making any investment decisions. If we zoom in on ICP specifically, it's amazing to see how strong it held up despite everything. The price fell hard, sure, but it didn't break below its previous bear market lows on the weekly chart. That's a big deal because it shows resilience. One of the main reasons ICP weathered the storm better than most is the way its community operates. Most ICP holders aren't reckless futures traders chasing leverage, they're long-term believers. The majority keep their tokens either in spot wallets or staked in the NNS, the network nervous system. Because of that, they weren't hit as hard as others when the storm came through. Now, when people hear about $20 billion in liquidations, it sounds terrifying. But let's clear something up. That doesn't mean $20 billion was lost in real money. What it means is that $20 billion worth of leveraged positions got wiped out. Here's a simple example. Imagine you have $100 in your trading account, and you open a $2,000 position using 20x leverage. If that trade gets liquidated, you don't lose $2,000. You lose your $100. The $20 billion number represents the total value of those leveraged positions that were forced to close, not the amount of real capital burned. But even with that context, this was a bloodbath. Whether you were using 2x, 10x, or even 50x leverage, it didn't matter. The market moved so fast that nearly everyone got wiped out. ICP alone dropped from around $4.56 to almost $1 in minutes. With just 1.5x leverage, you would have been completely liquidated. That's why this crash was a painful but powerful reminder. Spot is king. You don't need leverage to win in crypto. You just need patience and time. It's not about making millions overnight. It's about surviving long enough to compound your gains over the years. The ones who last 5 or 10 years in this market are the ones who eventually win big. Now here's where things get interesting. Even in the middle of this chaos, the on-chain data for ICP looks extremely bullish. According to IC Terminal, Dolphin wallets, that is holders with between 1 and 5,000 ICP, have reached a yearly high. That means retail investors are actually accumulating during the downturn. And it doesn't stop there. The number of large ICP holders, wallets holding at least 1 million ICP, has also hit a new 52-week high. That's a strong signal that both whales and smaller investors are quietly stacking their bags while the market panics. Historically, that kind of accumulation has always been a sign of long-term confidence. So while the headlines might scream crash and collapse, behind the scenes, smart money is doing what it always does, buying when everyone else is afraid. Now, let's talk about those who claim they bought ICP at $1.20 or $1.50. The truth is, most people couldn't actually get those prices. During that massive flash crash, liquidity completely dried up. The order books were almost empty. If you tried to market buy, the slippage was insane, meaning your order executed at much higher prices than expected. And if you tried to place a limit order, it probably didn't fill before prices bounced back. So yes, technically the price touched those low levels, but very few actually managed to grab ICP at that bottom. Still, those who did manage to load up anywhere near that range are sitting on incredible entries now. There's also another major development worth celebrating. According to data shared by Zero to Hero, over 1 million ICP were withdrawn from centralized exchanges overnight after the crash. The total supply of ICP sitting on exchanges is now just below 52 million, which represents roughly 10% of the total circulating supply. That's a very bullish metric because it means people are not only buying ICP, they're also taking it off exchanges. And that's exactly what you want to see in a healthy ecosystem. When users move their tokens into self-custody, it reduces selling pressure and signals strong long-term conviction. And this brings us back to one of the oldest lessons in crypto. Not your keys, not your coins. We've seen this play out too many times. Remember what happened with FTX? People who left their crypto on exchanges woke up one day and couldn't withdraw anything. That's why it's so important to hold your ICP in your own wallet, where you control the private keys. You don't want to depend on any centralized platform to protect your assets. Before we wrap things up, let's touch on an important upcoming event, Caffeine AI, one of the most anticipated projects in the ICP ecosystem. Last week, Dominic Williams mentioned that the next key date for Caffeine AI was October 15th. Now, there's some speculation about whether this launch might get delayed due to the current market turbulence. Honestly, it could go either way. It wouldn't be surprising if the team decided to wait for the market to stabilize a bit before rolling it out. But at the same time, Caffeine AI is an AI-powered platform. It's not entirely tied to the crypto market's volatility. OpenAI doesn't delay updates because Bitcoin dips, and ICP might take the same approach here. Either way, we'll know soon enough when the official date arrives. So, to sum it all up, October 10th will be remembered as one of the most dramatic days in crypto history. We saw $19 billion in liquidations, countless traders wiped out, and prices across the board collapsing faster than anyone expected. But amid all that fear and chaos, opportunities quietly emerged. ICP proved once again that it's built on solid fundamentals and a loyal community. Both whales and retail investors are buying the dip, large amounts of tokens are leaving exchanges, and long-term holders are staying strong. If there's one lesson to take away from all this, it's simple. Don't panic, don't over-leverage, and always play the long game. The people who survive these brutal corrections are the ones who'll be celebrating massive gains in the next bull run. So if you've made it this far, give yourself credit for staying calm through the madness. Keep your coins safe, stay patient, and remember, in crypto, survival is success. So, what do you think about ICP's current position? Are you bullish on its growth in AI and DeFi? Drop your thoughts in the comments below. If you found value in this deep dive, don't forget to hit that like button and subscribe for more breakdowns like this. Thanks for watching, stay curious, stay cautious, and I'll catch you in the next one.